Welcome everybody to the StockPickProfits.com market wrap. While everybody signs on, we'll kind of go through the legalities and stuff, right? Before we really get started here, as always, read the disclaimer. Okay, read the disclaimer. Past performance is not an indicator of future performance. Some key points: we are not registered investment advisors. Don't consider anything we say professional advice, and nothing in this broadcast is an offer to buy or sell any security of any form, any kind. Okay, so while everybody's signing on, we got that out of the way. It's interesting market day. We got a lot to talk about today. Always read the disclaimer. Okay, let's go ahead and get started. So it was an interesting day today in the stock market. A nice little rebound day, right? We got an ambulance going by. We had a little rebound going on here today. The stock market closed up real nicely today. A little selling towards the end. It was up over almost 200 points at one point. The Dow closed up at about 98 points. The S&P at about 16 points. Nice bounce off that 2,700 we've been talking about. And the tech stock started to show some life after that little sell down after the new highs they made a couple weeks ago. They were up about 58 points. Nice recovery across the board. Pretty much green numbers across the board. Really nice. In fact, let's highlight that a little. And you can see there, that's the final count for the day. Even the small caps were participating, which actually they've been kind of leading this for the last few days. The Russell 2000 has been doing well for quite a while. Let's get into the market talk right away. So now that everybody's kind of signed on, settled in, the market talk today, Amazon, right? Amazon made a quick move, and oh my goodness, wasn't that an amazing move by Jeff Bezos? Walgreens has been working on that deal to buy Pillbox for about 3 or 4 months. It's been the murmur all over the pharma trade, and like everybody else, we've been watching it, right? And all of a sudden today, the news comes out, and guess what? Bezos made the deal. So now Amazon owns Pillbox. Walgreens is just left out in the cold. It's kind of an interesting situation, right? Bezos comes in and stole their lunch. $1 billion he paid for it, but it's a great investment. It's a great way. It's funny, but way back when we started the show, back in 2016, we used to do the show. Before we revamped it and stuff. And we talked about how Amazon, they had made a couple moves, and we had even mentioned that we felt like they were going to make a move into online drug sales. And look, it's turning out to be true. Really, that's the horizon that Bezos hasn't conquered yet in e-commerce, right? Which is the drug sales. Really good. And the good thing about it too is if you get Amazon participating in this sector, it'll help with regulations and stuff. They've got a lot of pull. They've got a lot of power, a lot of strength behind that. And so it's absolutely a good thing all around. Moving forward, it was a good rebound day, but let's stay with cautious optimism right now. And the reason is we really want to be careful. We talked about it with the S&P 500 before. You can see on the right side there that could have been a head and shoulders. It still can. It looks like we might be marking a shoulder there on that right side. But that green day we got today is very encouraging. If we can get a nice strong follow-up market tomorrow, which is a little difficult, right? Because it's a Friday. There's a hard news cycle going on. Right before we came on this, there was a news flash that came through. There's some shooting in, I believe it was Maryland. Oh my God, these shootings need to stop. But it just kind of plays into that, where if we can get some kind of footing, we'll bounce off that 2,700 and we'll start making new highs. So where your cautious optimism comes in is today really was encouraging because the financials finally started to show up. The banks and all your other businesses. Bank of America, we're actually in a trade with Bank of America as a service. and actually another BDOC business development company. We like AINV. And over the last couple of days, they've been really struggling. That trade started to look a little ugly, but now it's starting to take shape. Maybe the financials are starting to participate. If the financials can participate, this market can go to new highs. Tech has been doing its thing. We've had a little sell down in tech the last couple of days, but nothing really to worry about. That NASDAQ closed over 7,500 today. But what we really need to see is another sector kind of give a little boost, right, to the tech. We all know that in the first 7-8 years of the bull market, tech was about 70-75% of that bull market. And it'll probably stay the same. Really, I mean, you think about it, it makes sense. Tech is the driver for everything right now in the economies and just in life in general. So it can't carry the whole load. Somebody has to carry that other 25-30%, right? What's it going to be? Is it going to be bios? Biotechs are not doing too well. They're kind of just up and down. They have a good day, they have a bad day. The one thing we think it might be the savior for this market is financials. We've got the other half of those stress tests this week. We had a kind of a soft GDP number, right? It came in at 2%. That's actually a drawdown from the original 2.2%. But again, going forward, we're looking to bigger and better things. The problem with the GDP this time was the consumer spending. Now, there's a lot of people that feel like consumer spending really is the key to this right now, and it does make sense. But the trick to it are these tax changes and all these changes that have gone on in Washington the last 3 or 4 months. When they start to kick in, the consumer spending comes back, right? All of a sudden, you got more money in your pocket. Now, whenever you look at a GDP number, you're looking at a past number. You're not looking forward, and you have to remember that. You have to be able to compartmentalize it, and you have to remember that this is an old number. When this happened, they were doing the legislation. They were passing through the tax reform and all that. So now the next number is the big one, right? Because we want to see how did it affect it, right? You've got a big, heavy media on the left, heavy politicians on the left saying it's going to implode the system. And then you've got people on the right that are saying that it's going to just make the system so much better. Let's see how that goes forward. Now, like we said, with cautious optimism, we're optimistic. We think that the policies are going to work and stuff. And we think it's at some point this trade war, it's going to soften. And instead of being threats and lists, it's going to be deals. So let's see how that works out. Let's give the guy a chance to do his thing. Let's talk about our saying of the day today, because you guys know who this guy is? Any of you know who this guy is? It's Charlie Munger. It's right there on the bottom left. But Charlie Munger, for those of you that aren't familiar, is Warren Buffett's right-hand man. Now, yeah, you guys all have, everybody's had a job and stuff, right? Imagine when you start a new job, imagine if you had to train for 20 plus years. I mean, your supervisor or your mentor or your manager or whoever, 20 years you got to practice, and then you're still not ready. That's what Charlie Munger's been going through. He's been side by side with Warren Buffett for quite some time. And you can see that he actually, his saying is really in line with Warren Buffett. I just wanted to clear that one tag there so you guys can see it real well. But this is great saying here again. The big money is not in the buying and the selling, but in the waiting. Right? Again, we've been talking about it with our members and stuff, and I'll kind of close the market wrap with this. The last week and a half, 2 weeks have been kind of a slow time, right? Usually we're packing off sales. But guess what? Right now, we've been kind of building a position, and we're in that, right? The big money is not in the buying and selling, right? We've been positioning. Now we're in the patience, and we're starting to see this market come around. We're starting to see a lot of trades we're in taking real life and starting to go to green or close to green and stuff. And it's just the patience. Again, remember, that's been the theme of the week. Patience, okay? Patience. Don't second guess yourself. Don't panic. Don't make rookie mistakes. Be patient. You start a trade out and you have a plan for it, like we've talked about in the past with our trade team, they have to have a very specific plan for every trade we put on the board. And that includes an exit plan. That includes a safety valve. That includes what if it goes down? What if the market crashes 2,000 points? What if the market goes up 2,000 points? And that's all part of your patience. So you guys out there, you be patient. You be very logical about your trading. So, and if you're not, you know where to go. So let's close that with some questions. Let me scroll through here. And just real quick, Chike, welcome. First time I've seen you. First time we've seen your name, or at least first time I've noticed. I'm sorry. Of course, Savara and all them are here. So let's see. Question. Subscriber was asking about the stock history of Whole Foods now that they are an Amazon company, and if we are keeping an eye on it. Nah, not really Whole Foods. We don't Whole Foods, we do keep it on a stock. It's always on the watch list. There's certain stocks that are always on a watch list, and you guys that are traders and stuff out there looking for good advice, this is, certain stocks should always be on your trade list. Whole Foods, Amazon, Apple. You always want to have like your Facebook, and these are just really, you want them on your watch list because you always want to keep an eye on them because they're sector leaders. And what happens is a lot of times you can identify good trades maybe on the underlying part of the sector just based on those. Whole Foods, now that Amazon's bought it, oh, thank you, Samuel, I got one right. Mark it on the calendar. I got a name right. Thank you so much. And what happens is now that Amazon's in control of it, we would, if we were traders in it, if we were like serious traders in it, we'd stay more with the Amazon trade, right? Because Amazon, it gives you a little bit more diversity, and it's got the control of Whole Foods and stuff like that. But there is no doubt that Whole Foods was an incredibly smart move by Jeff Bezos. Just like the pillbox buy today, right? I mean, that was just genius. And the way he came and he swooped it away from Walgreens, man, he dropped $1 billion on that deal. And he's not a stupid guy. If he dropped $1 billion on it, it's a good move. Guaranteed. Guaranteed. Yeah. Yeah, Ronnie. That we'll discuss in the group. That's an actual... within the play. So let's see if we got anything. Thank you, Achike. I thank you so much. I'm not even gonna try to say Savara today, but we got a couple minutes. So if you guys got some time, I got to get back to the trade room because it's been real busy. And Friday coming up tomorrow. So all you traders out there, make sure you check your portfolios. Make sure you do a good maintenance check on your portfolios. Make sure you've got the positions you want. Make sure you got your little watch list going forward. Some of the things we're watching for is, like, you guys know, we're in a Snap trade. Snap had a real good day today. It was up 3-4%. We're into that, and we're actually looking to cash out that pretty soon. But you guys, it's a good time right now, Thursday afternoon, Thursday evening. Go in, check your portfolios, and kind of brush off your watch list and take a look. Because if we do get a solid bounce off this 2,700, the all-time high is next. So and take a look at it real quick here, because we were looking at it earlier. The S&P 500. Really, you see, you guys hear us base everything too on that S&P 500. I know your people are so conditioned. 2786. Yeah, that was it. About 2785 to 90. Say, give it a little range. 2785 to 2790. If it can break that top, it's off to the races, and it'll probably challenge that all-time high of 2875. So you want to be positioned. You want to be in right? What if this is a head fake? Ooh, you know what I mean? You don't want to be going in deep on long positions and then it's a head fake and it just comes down. That's why the cautious optimism right now. Yes, we think the market's going to go up, but we want to be a little cautious with the way we put our trades. And Samuel, trade war talk may have an impact on German lira. Possible shortcoming. German import cars are hard to trade. The automakers really. The best way I can sum this up is really there's three tradable stocks in the automaker. It's Tesla, GM, and Ford. Everything else is kind of, it's hard to trade. It's hard to track. Plus, see, you got to remember with the automakers too. Take a company like Ford. You're talking about foreign cars, like say a Jaguar, right? A luxury car. We're not going to talk the BMW and the Mercedes, because BMW and Mercedes at this point in their business, they're not really luxury anymore. They have lower price points. They have economy versions and things like that. Luxury items don't make discount versions. Okay. You either buy the luxury or you don't. So let's talk Jaguar. Well, Jaguar is owned by Ford. So if you want to play that, play Ford. So, and that's why I'm telling you, I'm at the studio. Come up. Oh, are you here, Samuel? Come on up. Come on upstairs, dude. You know where we are. And that's the big thing about automakers is you really have to understand the market. And you have to understand there's a lot of dual ownership and stuff in that. Like with Jaguar is owned by Ford. If you want to trade Lexus, I believe Lexus is Toyota. I believe, but it's important to. And Toyota's a good brand too, but it's a difficult trade. It tends to be not really a short-term trade. But if you're looking to short those German luxury cars, what you want to do is you want to look into first who owns them. Like with Jaguar, if you want to make a play on Jaguar, you've got to go. You've got to go with Ford, right? So you just want to keep an eye on it like that. It's a little bit tricky of a thing to play. We only use them for momentum trades, and it's almost always Ford that we trade. We like Ford. Ford's a nice little tradable stock. It's like Twitter, right? And ever since it's had that big breakdown, and it's come down to, I think it's like what, $12, $14, $15 or something. Last time we looked at it. That's how long it's been since we looked at Ford. But they're always great to play around earnings because they always get those big pops, big drops. It's like I said, it's like Twitter. Ford's a fun stock to play. Since it's had that big drop, man, it's actually so accessible for all sizes of portfolios and stuff. So it's a great trade, just like Twitter, just like Snap and all those. So look, gang, if you guys are all good, somebody had asked a question 2 days about a QPEG. We went and looked for the symbol. There's no symbol on it. If you're talking about QPEG, the video format, we actually looked at it to see if there was some way to invest in it real quick. I had the team just kind of look into it, and we're not finding anything. So if you're the one that posted that question, normal quick stuff. Oh, Samuel, good question. But if you're the one that posted that question about QPEG, if you can kind of clarify what you were asking. Let's talk about our normal crypto stock symbol, GBTC. We like to keep it simple, right? What do we always tell you guys? That if you want to play the automakers, if you want to play the automakers, if you want to play electronics, if you want to play tech, it's always easiest to do it with the ETF. The easiest way to play Bitcoin is to play the GBTC ETF, and that's just GBTC. Now, that's a fund. And now, remember something about this fund, and the reason we don't play it as often is because it's a very pricey fund. It's got big fees, and it's got big margin requirements. So if you're buying this to buy and hold, it's a little pricey for that. You get some deterioration in the price based on the fees. It's got extra margin requirements. So what you're paying more to borrow money on that. So again, anytime you pay more on your borrowing, then you have to make more on your gains to come out ahead. So you don't want to do that. All right, gang. So look, it looks like we've answered all the questions. It looks like we got to get back to work. It's busy. We got to be ready for Friday. If you guys aren't ready for Friday, click the link and find out how you can be ready for Friday. All right. It's been a pleasure with all of you. Thank you. We'll see you guys tomorrow.